Hello. Hello, and welcome to the latest biometric update webinar. We are here today with Marianne Miller from Prove, and we are here as always to discuss the hot topics and key issues affecting the biometrics and digital identity communities. I'm Chris Burt, the managing editor of Biometric Update, and I'm very pleased today to welcome Marianne Miller, who is the Fraud and Cybercrime Executive Advisor and VP of Client Experience at Prove. How are you doing today, Marianne?
Chris, I'm great. It's great to be here today.
Great. Well, we're glad to have you. Thank you very much for joining us again. Now, Marianne has extensive experience in the field of fraud prevention and digital identity and the way that those two things interrelate. Marianne has extensive experience in the banking field itself and has also served on the U.S. Federal Reserve's Secure Payments Task Force and the Federal Reserve's Scam Definitions and Classifications Working Group. Did I get that right, Marianne?
Yeah, that's a long title. You did. Thank you.
But a couple of important groups and directly related to what we're going to be talking about today, which is decoding risk signals accuracy and navigating the hidden risks in digital identity verification. Now, to provide a little bit more background for those of you joining us, Prove is the phone-centric identity platform. Is used by 1,000 enterprises, 500 financial institutions around the world, and that includes 9 of the top 10 banks in the US. Now, today we're going to be talking a lot about FinCEN. What is FinCEN? This is the Financial Crimes Enforcement Network. This is a bureau of the U.S. Treasury Department, and they released a report which was covered by Biometric Update, written up by our Bianca Gonzalez, who spoke to Marianne at the time to get some of her insights into what was really a very troubling report. So we're going to delve into that, what it means, and how we should respond as consumers, as financial institutions, as public institutions. We're going to try and cover a lot of bases today. So before we jump right into it, I just want to cover quickly a couple of housekeeping points. We, as usual, are going to do an audience Q&A today. So when exactly that will fall, we're not entirely sure, but we're going to talk about FinCEN and what these fraud signals have been telling us and not telling us a little bit first. So towards the end, we'll get into an audience Q&A. So please, for all of you joining us, use the Q&A function. You'll find the button at the bottom of your Zoom screen there and enter your questions, and we will have a look as we go along and get to as many of those as we can. We're also going to be making an on-demand recording of this webinar available. So if you have to step away for a minute, come right back. Afterwards, we'll send you a link. You can jump onto the link and watch the portion that you missed, or watch your favorite or the most interesting portion over again. So thank you to everyone for joining us. And without further ado, I'd like to ask Marianne, if you can please start us off with a review of this FinCEN report, what it says and how they arrived at their conclusions.
Yeah, I'd love to do that, Chris. Maybe we can move to the next slide. That'll help a little bit guide the conversation. If we can move
There's
to
housekeeping parts, and there's us.
Yeah.
And FinCEN.
Okay, we can move on to the next slide. There we go. So, as you mentioned, Chris, I spoke with Bianca from your team when kind of the news was broke. And let me give you some background on the Identity Project and the background around what FinCEN's doing here. So as you mentioned, FinCEN's a very important regulator in the US. They're really tasked with the safety and soundness of the US banking system. And really, they're focused on terrorist financing. They're focused on activity that would bring a bad reputation to the U.S. Payment system. What FinCEN did was I attended Identity Week in DC, actually Federal Identity Week. And I attended a session where the Chief Digital Identity Advisor to FinCEN, and her name is Kay Turner. Kay reported with her team an update on the Identity Project. So at the end of 2021, the Deputy Director, Acting Deputy Director of FinCEN, his name is Jimmy Kirby, mentioned that of the 3.8 million suspicious activity reports. Now in the US, for those of you who are not, well, globally, those are probably well known, but let me just explain what they are. Financial institutions around the world have the obligation to file suspicious activity reports under certain circumstances. And that's certainly when they feel like the financial system is being used for purposes of not legitimate financing. So FinCEN in 2021 had 3.8 million of these suspicious activity reports filed. What happened is the acting deputy director announced that 3 million of these 3.8 million had identity irregularities. So if you can imagine, Chris, the majority of the SARs having those identity irregularities, that's concerning. So what happened was when Kay took her directorship, when she took her appointment, her team came to her and said, and she explained this on stage, that her team said, we have an identity problem. And she says, well, we have to quantify that. Really, it's important to quantify that. So her team took a deep dive into the SARs, and we can move to the next slide. And the one thing I want to note before we start with the breakdown is when we're talking about the actual number associated with these suspicious activity reports, it's in the billions. So we're talking about not millions of dollars, we're talking about billions of dollars associated with these filed SAR reports. So what Kay's team did was break down the identity step, the exploit, the typologies. They really created a framework. And that framework was really based on, to start her task of saying, let's quantify this. Where are the biggest problems? Where are we seeing this identity problem that we're noting and we're talking about? Where are we seeing this in the ecosystem? So unfortunately, they were seeing a lot of it. So when you fill out a SAR report, there's something called a narrative. And in that narrative, you're filling out information. So out of the abstract from the narratives, this is the key typologies that FinCEN noted. And that was, false records and scams, synthetic identity, identity theft. We saw money laundering, account takeover, abuse of access. So there were quite a few typologies that fall under identity here listed under circumvention, compromise, and impersonation. So you can see that, when you're filling out a suspicious activity report, it's important to fill that out correctly. And what we're running into is with the false identity, it brings a challenge to the table. So we can move on to the next. So the highlight results were that fraud was the most reported and impactful impersonation typology. Identity theft was the most reported. So there we see right there that we have an identity problem. So the most reported SAR across the board was identity theft. Compromise was the most impactful, abuse of access. So that is probably what we're looking at, like business email compromise, because the dollar amounts are so high. We had impersonation reported most frequently. So we have, a lot of impersonation occurring during these SAR events. Compromises and circumvention reported most frequently among money services bureaus. So we're seeing among these SAR reports high-level themes that come across, and certainly identity is part of those high-level themes. And the one that stood out again to me the most was that identity theft was the most reported. So that's very concerning.
Absolutely. So, I mean, these are a lot of the things that we cover in the fraud space on biometric update. And when you refer to the narratives and the identity problem, I mean, maybe, Marianne, can you talk a little bit about how identity is represented on the SARs, just in terms of, like, you know, if my account is the one that's taken over, presumably we don't know who's taking it over. So so is my name on the SAR?
So let's do this. Let's take it one step further, Chris. Let's walk through a case study here. I have a case study, and that will help us start to crystallize the question that you just asked. So let's start out, and for those in the U.S., not in the U.S., you know, since we have a global audience today, I'll walk through this in that context. But I started out with this real life example. Who is Susie? And Susie is any one of us. When I say any one of us, it's anyone in the U.S. banking system. So we all have a bank accounts. So we all, you know, have our identity that's used to open up bank accounts. Mm-hmm. So Susie is any one of us in the U.S. If we want to move to the next slide. So what happens when Susie's identity, and in the U.S., to open up a bank account, you would need Susie's name, full name, her address, date of birth, and social security number, which is used as a numeric identifier, personal identifying information that would be required, and actually required by law in the U.S. for banks to collect. This is part of the Patriot Act, part of what we call SIP, Customer Information Program requirements. So that has to be collected, you know, when that account is open. So what happens is banks open up accounts with that information. And on the other hand, too, what we have is that bad actors also use Susie's customer information to apply for public sector funds. So in 2021, we still had the remnants of the COVID era fraud that was occurring on the public sector side. Right. That was actually hand in hand being cashed out or exploited within the banking system. So the way that this works is Susie's identity is used in multiple states to apply for, say, let's just say unemployment insurance. Or Susie's identity is used in multiple states to apply for a PPP loan, you know, under the premise that she has multiple businesses. Then that's exploited state by state by state. So Susie's identity is pulled into multiple claims on the public sector side, but her identity is also being used across the U.S. at multiple banks. And in the U.S., we have a lot of banks. We like banks. We have over 5,000 banks in the U.S. banking system. So what's happening is Susie's identity is being used to open up accounts at several different banks as well. So this picture is just a pictorial of the fact that, you know, the fraud was happening on the public sector side. And then, of course, and then the next slide will show you a little bit about, you know, how Susie's information's used to open up accounts at different banks, different fintechs. It doesn't just have to be a bank, it can be a fintech as well. Anyone that can receive money into an account that has a routing and account number in the US, Susie's identity can be used. Now,
and so, Marianne, these banks and fintechs, these are the accounts into which the fraudulently stolen public benefits or loans are deposited, right?
That's right. That's right. And herein lies the challenge that we see. And when we talk about, you know, deciphering the signals and, what we're, kind of intended here for the webinar today is, how can this happen? How can Susie's identity be exploited on the public sector side across the United States? And how can Susie's identity be used at multiple banks and multiple fintechs to open up accounts without Susie's knowledge? Susie doesn't have any knowledge of these accounts being opened up. And part of the issue is in the US, if a bank account is opened up, or let's just say I'm a bad actor and I have Susie's information and I go to a bank and I open up a credit card under Susie's name. Susie, because we have the concept of credit bureaus in the US, would see that that credit card was opened up. She can go to the bureaus, and some of the common bureaus in the US are Experian and TransUnion and Equifax. And certainly, they have mechanisms where Susie can check the inquiries to that bureau. She can check her trade line and look at her bureau report. And this secures her credit in the US, and also provides Susie the opportunity to contact the bureau or contact that financial institution and report identity theft. I did not open up that credit card. Unfortunately, in the US, we do not have the concept of a deposit bureau or a fintech bureau. So Susie doesn't have anyone to call, doesn't have anywhere to go. If a bank account is opened up, if several bank accounts are opened up under her name, or several fintech accounts are opened up under her name, that's problematic, because what can happen is those accounts can be opened up. And then what happens is, we can move to the next slide.
There we go.
There we go. Susie's name and that account can be used for what I call what goes wrong when you don't get identity right. So this is Susie's name on that account can be used for money laundering. It can be used for ACH fraud, check fraud. This can be used for faster payments or person-to-person's payment fraud. It can be exploited in every way that you can imagine. There are dedicated Telegram channels right now live sharing bank account information of what we call cash out accounts, mule accounts. In Brazil, they call them orange accounts, because they're squeezing the bank, which, I really like in Brazil. They gave this actually a name. But yeah, these are accounts that Susie doesn't know that her name's being used, her identity's being used to conduct nefarious activity. If we take it even one step further, what's very scary about that is back to the purpose of FinCEN. It can be used for human trafficking, terrorist financing, child exploitation, human crimes, which, banks have an obligation to report if they are suspicious. But on the narrative, when you look at the narrative, you're going to have who is the suspect? We don't have a suspect. Susie's a victim here, so if you're filling out the narrative, you really don't have a way, the part of the SARs purpose is to really form attribution, is to really look for who's responsible for this, criminal activity, and to keep the US banking system safe. And what happens is it breaks down. If you don't get identity correct from the beginning, then that's what breaks down. And why is identity breaking down? One of the reasons is data breaches. Of course, we know that this is how Susie's information, all of her name, her social, her date of birth, her phone number, everything's in tightly nice put together packages and sold across the dark web, sold across Telegram channels. And so we know that our identities are compromised. But we also know that in the day and age when identity proofing challenges, in other words, answering the question, is Susie presenting her own information in the flow? or Susie validating her own information in the flow. That is where we're really at that juncture. To your point, Chris, when you talk about technology with biometric update, the type of technology we need to keep up with the modernization of good KYC processes.
Right. So I want to get a little more into the threat vectors and what we can do about them. But just to review, so we have a situation where a person's data is breached, which they may or may not know about, right? In a lot of cases, will not know about. And then, as you described, Marianne, if that data is used to carry out a certain kind of fraud that involves a credit application, then there's a mechanism that we, at least many of us, are aware of in the form of credit bureaus, where we can check and find out that our identity is being misused for fraud. But it sounds like you're saying that if that doesn't happen, that we are likely to not have any idea as the person being victimized. And so we don't know that our own identity is being used for fraud. And then the organization that's trying to enforce the rules doesn't know anything about who's behind it, other than this piece of information that we don't have ourselves, which is that our name is being used to carry out the fraud. Is that a fair way to put that?
That's right. For core banking accounts, or what we call DDA accounts, direct deposit accounts. In fact, if we go back to the FinCEN report, which was so important that we started with, FinCEN discovered that 42% of all SARs, 42% or 1.6 million of all the SARs that were filed in 2021 were fraud.
Wow.
So yeah, so we're looking at the fact that in a large majority of those, but remember we talked about that identity theft was the most commonly reported. A large majority of those have Susie's name on the account, not the perpetrator who actually committed the money laundering, or committed that fraud, or committed that check fraud, with that opened account that they sold on the black market. So it's really really hard for us to really get to the bottom of like where this identity, where the regulator, and basically the banks filing these SARs and the regulator observing that these identity irregularities are there. And I'm sure some of the banks have noted on the SARs that maybe the identity looked questionable. I'm sure that that's the case. But the fact that the regulator has a seat across the industry, can see that this is a common theme across the industry. It's basically the banks telling the regulator, we have an identity problem, is really what it amounts to.
Absolutely. So so we're aware that we have this problem, and we're aware that part of the problem is that we don't have the kind of visibility that we need, right?
Right.
What about the threat vectors that are contributing to this breakdown? We talked a little bit about account takeovers and the different synthetic data and the different kinds of compromises. What else can you tell us about the major pathways for fraud, let's say?
Yeah, maybe we can move to the next slide and we can talk a little bit about where why this is happening, what is challenging the banks today, and what's challenging the fintechs. In fact, what's challenging both public and private sector. It certainly is. It's not. It's definitely an industry problem. It affects almost every industry that you can think about. Whether it's healthcare, insurance. Identity is a challenge, especially when it comes to the threat vectors that we see for banks. We're seeing bot attacks as an example. So we're seeing bot attacks that are completely scripting the account opening processes. So you can see those bot attacks that are successful. They can open up mule accounts, identity theft accounts, synthetic accounts at scale. If those scripts are smart enough, and if that financial institution or that fintech does not have bot protection of some type, we are seeing scaled identity theft happening. Where we have that breakdown where banks traditionally have been using tools that do what I call entity resolution. They're able to say, of course, yeah, this is Marianne's name, and this is her, or Susie's name. We'll go back to Susie. This is her date of birth, her social security number, and her address. And Susie's not deceased, and she exists out there. So there's many good tools out there that give you the confidence that that's all of Susie's information and it's correct. But the additive and what's missing is the piece, again, what are those signals? What is that information? What are those solutions and processes that help tell you that Susie's presenting her own information? And that's where the bad actors take take advantage of that. Once they get that account, we hear about the big check fraud issue in the US. Part of that equation is once you get the check, you need a place to deposit it. So you need a mule account to deposit it. You need one of these identity theft accounts. I've seen also what happens is linking an external bank account and pulling those preliminary funds over from another identity theft account. The bank gives you preliminary funds availability, and then you cash that out with a debit card. That's another thing that the bad actors are doing. They just cash that out, and they do that as many times as they can get away with it. They go in and they deposit money, and then they take a trip to Las Vegas and come back and say, I lost my debit card in Las Vegas, and none of these transactions are mine, and they dispute everything on the account. So dispute abuse is what they do. They can use these DDA accounts. They can conduct faster payments fraud. They can send money from one account to another, and then they can call the bank and say, by the way, that was fraud. That was an account takeover. I didn't send that money. So those DDA accounts are so valuable. And then, of course, we talked about how valuable they are for some of the other types of money laundering and more nefarious crimes. So these DDA accounts, if these bad actors obtain these at scale, can be used over and over and over again. And again, they can do this at one bank, and then they can move to the next and move to the next.
I guess that's really one of the things that's really striking about your explanation, Marianne, is just the clear level of professionalism, unfortunately, that's behind a lot of these, the sort of complexity and the ease with which it is sort of harnessed to scale these attacks and really make them a much larger problem than we might assume if we think kind of a legacy conception of the fraudster as like the lone actor in the basement or whatever.
Yeah, and the other thing, Chris, is what I didn't mention, and what's important to us all as consumers, if we think about it. So we're talking about how Susie's identity was used to open up accounts. But what also happens is these accounts are used to scam all of us. So if you think about it in the scam ecosystem, the bad actor needs an account to send the proceeds of the scam to. They need an open bank account so that they can obtain their proceeds. And then usually that gets moved out of that account to an overseas account or an account that they control. Well, they need that extra bank account around so that when they conduct that romance scam or that business impersonation scam or that government impersonation scam, or the multiple scams that are out there, that they have a place for that money to go. So again, we see how important identity is. Now, I'm not saying that someone wouldn't use their own identity, to open up a bank account and commit scams, but they're much more confident with working under someone else's identity or a synthetic identity. So that's, normally what we see in the fraud world.
So that kind of gets into the kind of attacks that we've seen. And should we talk a little bit more about what the specific attacks are?
Yeah, let's do that. Let's get down into the types of attacks that we see. So yeah, we talked a little bit about true name or identity theft and creating mules. We talked about synthetic identity that creates mules and scams. We talked here about what we see in the other threat vector of bots that, open up a web form and create lots of, accounts at scale. And of course, even when we think about, the kind of threat vectors that are out there, once an existing account's opened up, there's account takeover. That's, and then, you kind of ask the question, well, what does identity have to do with account takeover? A lot does, because the fact that if you establish Susie's identity when she opens up the account, what you need to ensure is that Susie's still the person accessing the account. So that could be, that's identity, and we talk about authentication a lot. We talk about the forms of authentication. But I'm a big believer, and I'm a big proponent, actually, of combining identity proofing processes with authentication processes to ensure that you're persisting that the true customer is really accessing their information. So again, if that breaks down, then you run into numerous vulnerabilities that can happen, and open access to bad actors to your account.
Right. Well, we can really see the range of vulnerabilities and the number of them from this graphic here. And it also starts to introduce as well some of the tools that we can use. And as you just referred to, Marianne, the ability to introduce certainty or increase certainty that the person who's being onboarded and who's passed what are typically the most stringent identity checks in the process, right, is actually still the person controlling the account. That's something that organizations can work towards in order to help improve this situation. But what else can we do to protect our businesses and ourselves? I mean, we've got a frightening scenario here with millions of fraudulent incidents, many of them involving non-trivial amounts, or most of them involving significant amounts of money, I would imagine. So what's the good news, Marianne?
Yeah, that's right. That's right. So we've talked a lot about, where we are as an industry. We've talked about the threats. So the good news is there are solutions, there are signals, there are ways that we can start to improve and modernize our identity proofing processes. So let's talk about some of those signals. So it's important, one thing for sure is we all have this phone with us. And maybe we go back to that slide previous, Chris. I'll just walk through a couple of those. Is for example, let's look at signals like the line type of a phone. So we have our phone, it's often used as an authenticator. Are we looking at, has that phone been SIM swapped? Has it been ported? What's the reputation of that phone? Is that a long tenured phone or a short tenured phone? What's the identity that it's associated with that phone? Has that identity been associated with that phone for a long time or a very short period of time? Are we looking cryptographically during the login? Are we looking at that SIM card at the other end of that phone through a cryptographic process to ensure that the possession of that phone is happening right now when we're in the session? So are we answering the question, is Marianne or is Susie in possession of her phone? And that's a critical equation. Those are critical signals in starting to form an identity of an individual. And so There's lots of what I call data. There's lots of scores, like trust scores. There's lots of information that's available through authoritative sources, but also through real-time processes that can start to answer those questions. Is Susie presenting Susie's information in the flow? Is Susie on the other end of that device right now? Is Susie authenticating from her phone, not just a phone number that we've collected during the flow or authenticated or I guess was provided during the flow, or we checked during the flow, but actually live in the flow right then and there. So these are really important aspects of beginning to change the equation, that we're not just looking at Susie's data to ensure it's correct, but we're actually looking at those key signals of Susie live on the other end of that interaction.
So in the same sense, or in sort of an analogous sense to liveness detection being an important part of a biometric check to ensure that the biometric data supplied is actually being supplied by the individual, by a similar token, the information which financial institutions need to collect from individuals to perform authentication, to complete a transaction, etc., should be validated, you're saying, by checking the source, if you will.
That's right. Checking that, what we call digital identity proofing, to make sure that you're proofing, like you said, I think you used a perfect example, the liveness of the individual and the confirmation and you're assured that the individual that's presenting their own information or authenticating to the channel or logging in is actually still Marianne, or the person who's applying for your bank account or your fintech account is actually the real individual.
Very good. And these phone signals, they are gathered in real time. Prove has a relationship with network operators. Can you just give the sort of the 10,000 meter view, if you will, on how that works?
Yeah, Chris, that's a really good question, and that's actually part of where we're unique in the industry. Prove has a long history, and we've invested into the actual ecosystem of working with the telcos, where we sit between the telcos and the underlying system that the telcos actually sit on as well, where we can actually obtain that information in real time. So we're actually helping our customers provide that information. Once we get that information, we know how to disseminate it to actually make the possession of that information, the real-time signals of that information, associate that with the telephone number, then associate that with an identity, and collect those three. We call it PRO, possession, reputation, and ownership. We call that process the real true digital identity proofing mechanism, and we'll talk a little bit about that towards the end of the webinar here. But we're able to collect that information in real time, which is very unique.
Absolutely. So, yeah, and on that note, I think it might be good to give us some key takeaways that as we move towards we're about to have Thanksgiving in the United States next week. We have a lot of end of year planning coming up. What do we do for 2024? I mean, the problem has presumably not gotten better. It's probably gotten worse since the FinCEN report, which looked back to 2021, right? So this is just a problem which the bad actors have been progressing in the whole time, right? So again, maybe you can supply us with some optimism as we look ahead to 2024, Marianne.
That's right. That's right. So you absolutely don't want. We can maybe move to the next slide. You don't want your financial institution to be in the headlines. We've had a lot of news about fake accounts, and fake accounts fall under the category of identity theft and synthetic. I think this is all public information. I can certainly share this, but PayPal had to announce 4.5 million fake accounts, and LinkedIn had to remove 35 million fake profiles, and I still see them every day. We've had actually publicly some banks announce in the U.S. that they paused their digital identity processes because of the fraud rate. That we've had that happen. If you're a fintech and you're growing your business, if majority of your business or a lot of your business is fake accounts, that's can cause some problems with your investors. If not really understanding what is your good population versus your population that's not authentic. So it's really very important to really look at what are those key things that I can do in 2024. What investments or what key planning do I need for 2024? If we can move to the next slide. So I tell everyone that I come across, based on the FinCEN report, based on the headlines that you don't want to be in, based on the fact that identity touches everything in your bank. It touches your check fraud processes. It touches your dispute processes, your payment fraud processes, your customers being victims of scam. Because it touches everything, it's hard not to make a business case to improve identity in your organization. But when I say improve identity, it's really looking at your digital identity strategy. How do I improve that in 2024? So, I walk into financial institutions sometimes, Chris, and I ask the question, who owns identity? And I get fingers crossing like this across the table. So is it the BSA AML officer? Well, they might own KYC. Is it the CISO? Well, they probably own identity for access to the bank, but not consumer. They probably are a key stakeholder. Is it the person that owns authentication? Well, authentication is an important part of identity, but it's not truly identity in and of itself. So I really challenge every bank leader who's on this call, every chief risk officer, to go back to your organization and designate someone who owns digital identity in your organization. Find that leader, find that champion, find that person who's accountable and responsible, because that person will be in a very important part of your organizational structure in the future and today, and improving your 2024 platform. Once you identify that person, then their responsibility should be to really put this framework together. Do a risk assessment. Look across all of my channels where digital matters and see where my gaps are. And then identify those gaps and then begin to fill those gaps. Very important. The next thing I would say you got to get right in 2024 is look at your one-time password processes. Really, I think we're going to be, while it's widely used today, and I don't think OTPs are going to go away tomorrow. I do think that organizations that are thinking ahead are looking at, how do I improve that authentication and identity process for my customer? And how do I sunset OTPs? And that is definitely something that is actively being discussed sometimes it falls under the umbrella of password lists, but it's definitely being discussed.
Good.
And the last thing I would say is, stop creating mule accounts that support scams. Excuse me. Yeah, that's an important part, because of the fact that, as we talked about, identity plays an important part. The failure of identity plays an important part in feeding this really global scam ecosystem.
Yeah, and if I might editorialize for a second, I just want to go back to the OTPs for a second, because I've just recently had the personal experience of dealing with several OTPs for a couple of transactions that I was trying to do. And as as headlines proliferate about how the limited value that these things have for security, I think we're about to see a shift in consumer attitudes where OTPs go from being an accepted part of processes, identity proofing and authentication processes that consumers put up with because they think that they're getting some security in return. They're going to switch to become more like passwords, where they're a hassle that people don't want to deal with, and rightly think could be done better a different way. So just my 2 cents. I don't know if you how you feel about that, Marianne.
Yeah, I like your 2 cents, Chris, very much. I think that you're absolutely right. And in fact, you know, I use the term smart OTP and dumb OTP.
Right.
They might be kind of funny terms, but if you're not looking at that one-time password and you're not checking if that OTP has been SIM swapped, if you're not actually doing that in real time, then that OTP is really worthless. You think you've sent it to your customer's phone when in fact it's in control of another third party. We see, these SIM swaps happen quite often in the account takeover process, but now we're seeing them in the account opening processes too, where, because of the fact that it's so, there's, a lot of ways that SIM swapping happens. There's vulnerabilities even at the telcos where, they're insiders being paid to actually conduct the SIM swaps. So it's, becoming very prevalent and very easy to do now. And there's Telegram channels again set up to actually initiate all of this. So I think, to your point, customers need to have not only the strength of security, but the confidence that the security, if you combine customer experience with the strength of security and the confidence of that security, I think we can do better as an industry.
Absolutely.
Yeah.
So any more, did you want to add any points on the mule accounts, Marianne? Or should we move on to a Q&A, a little Q&A with the audience?
I'll just add one more thought on the mule accounts. So given I'm on the Federal Reserve scam working group and definition group with the Federal Reserve, we're again classifying and putting a definition out there for the industry to classify scams. But what we do know is we're seeing scams on the rise. This is something that's not going away. We're seeing it, sadly, more and more. I just heard about a romance scam 2 weeks ago that was $4.5 million. So, we're looking at the fact that these scams are profitable for these bad actors. There's whole warehouses of people offshore in some countries where, scamming people in the US and the Canadian markets is actually, a way that they make a living. And it's, pretty scary. So I really think that, as an industry, if we put identity first, we're going to create a challenge and an opportunity, again, for those scammers that want to operate behind a synthetic account or operate behind an identity theft account. We'll make it much more harder that it'll force them into paying someone to open up an account or use their own identity. Then at least we have some way to follow the money and the real identity. So I think that it's really important that if we put an emphasis on identity proofing, we will see it more challenging for these bad actors to have an opportunity to cash out for scams.
Well, that would be a welcome development indeed.
Yes.
Yeah, let's drive those numbers down a little bit. I would like to, sorry. Sorry, yeah. So I would like to turn to audience Q&A for a few minutes. If anyone on the call would like to ask Marianne a question about the FinCEN report or about the signals that we can use to stem this tide of fraud, now is the time to do so. While people consider what questions they might have. I actually would just like to quickly ask Marianne, what is your impression of how banks and fintechs? Now we were just talking about what they can do. What are they doing? Are they aware of the extent of the problem and trying to kind of get a handle on it, or at this point is it really a matter of making clear to them what the problem is?
So Chris, I would say that, so to answer your question, we work at Proof with some financial institutions that are absolutely aware and absolutely putting their best foot forward and starting to modernize many of their processes, ranging from their account opening processes to their high-risk transactions to their login processes. So, absolutely, we do see financial institutions beginning to take identity proofing and looking at it through what I call a pair of fresh eyes. But we do have financial institutions that are aware, that are not aware. So sometimes, here's a good example. You'll go run into a financial institution, they'll see accounts that are opened up that are new, and then it has check fraud on it, or it has ACH fraud on it, and they're classifying it as first-party fraud. They really think that Marianne did open that account up. They really think that Marianne did deposit that bad check, when in fact it wasn't Marianne who did that. And if you're not using if you're only conducting entity resolution, if you're only verifying Marianne's name, social, date of birth, and address, then you can't be confident that that was really Marianne. Now, if there was direct deposit from a payroll and she was paying her bills and things look normal, then you might be able to know Marianne's identity over time. And you might be able to say, yeah, that account went bad, and actually we have a high confidence that Marianne owned and operated that account. But often that's not the case. Often these accounts are new accounts that have just opened up in your ecosystem, and your new account team thinks they're doing really well with the ad they just put on Facebook last night, and there's what we call sleeper accounts, where they've been opened up for a very long period of time. You might see a little money go in and out, and then maybe over a course of a year, suddenly the bad activity picks up on that account. And in fact, that's identity theft or synthetic behind that account.
Wow, so it really gives a kind of a window into the depth of knowledge and the kind of signals that you would need to make that kind of fine differentiation, right, between a new account and a legitimate and fraudulent new account, for instance.
Yeah, and Chris, sometimes it even takes educating internally, because sometimes there's still people within our organizations, whether we're working across the chief security officer, the chief risk officer, we're working across the business, the head of fraud, and maybe the head of authentication, and hopefully the head of identity. But each person understands identity from a different perspective. Mm-hmm. And getting everyone on the same page to the state of where we're at, and getting everyone on the same page of what it takes to move us into the future and to modernize is very important. So that's really, again, relies on your champion and that person who can actually articulate very well what the challenge is, and articulate very well what the solutions are.
Right. Very good. Well, on the path of understanding what our solutions are, we have one really good question here I would like to get to. We're actually running out of time, but there's a great question here about what is smart OTP, or can you explain for us smart OTP? Okay,
I think we have one more slide. Do we have? Okay, so I'll answer that with as quickly as I can here, since we only have 5 minutes. But there's two things. So smart OTP, many organizations are sending out a one-time password without looking at some of the important data that can happen in that process, and not ensuring that that OTP is delivered safely to that phone. So we'll start to talk about what that is. So again, real-time SIM swapping signals, absolutely necessary. Looking at some information like the IP address that phone number that's delivered to. So there's actual data behind the scenes that can actually augment whether this OTP has been safely delivered to that customer. So that's what I call smart OTP. Whereas what I call not smart OTP is really when you're just sending out that OTP and you can get a response. You can get that one-time password back, but you don't have a confidence level that Mary Ann or Susie actually put the 4-digit code into that 4 or 6-digit code into that OTP, because of the fact you don't know if she actually was delivered that OTP. So you're just I call throwing it against the wind and hoping that for the best. That's kind of the way I look at it. The other thing I wanted to talk about is really like, next to the OTP is really the 3 pieces of what I prove, or we call what's really important of putting together the identity, should I say, solution. And the digital identity confidence is really looking, again, at that possession of that phone, really looking at that SIM card right here that's in that phone that we carry with us all the time. Look at that reputation of that phone. In other words, has Mary Ann owned that phone? What's that tenure? What's that line type? And is it owned and operated by Mary Ann? Is that, and when you connect these 3 very important processes together with the underlying real-time components, it's very powerful in answering that question, is Mary Ann presenting her own information?
Perfect. Well, that's what we clearly need a lot more of, is certainty, not just that someone has provided this information, which all new accounts must have, but as we've been hearing about, that information can be had in various different ways. So having confidence that it's coming to us the right way is can see how important that could be to the process, and a really good window into the kind of thing that Prove can do to help enhance protection against fraudulent account openings, again, takeovers subsequently, and so on. So we are out of time at this point, so I just want to encourage everyone on the call to reach out to Mary Ann and to Prove at prove.com. I should mention, Prove has just released the 2023 online shopping and AI-based fraud report, so you can also find that through prove.com. So thank you very much, Mary Ann, for joining us today and sharing your insight.
Well, thank you, Chris. Thanks for the invitation, and it's been really a pleasure to spend time with you and your audience.
Likewise, and I also want to thank everyone in that audience who joined today. Appreciate you joining and lending us your attention. We will be back soon to talk more about biometrics and digital identity. And until then, everyone, stay safe and have fun.
Bye-bye.
Bye.